Hey everybody, Tom Gentile. Welcome to Tom's Trading Room. I have got a session I want to do with you on protecting your Bitcoin profits. All right, unedited, unfiltered, mistakes and all. Here we go. So first thing I want to do is I want to talk a little bit about what's going on with Bitcoin. And we've seen Bitcoin here in the last month. All right, the last month. Let me bring this up on the screen so you can see it too. Go from, well, really earlier this summer, we were below 30,000. And as early as last month, we were trading around 40,000. We jumped up to 67. Now we're consolidating and actually starting to pull back, which begs the question, can I protect? How can I protect my Bitcoin? Because they don't have options on Bitcoin. But there are a couple ways that you can protect your Bitcoin. I'm going to show you a couple ways that I don't do it. And I'm going to show you a couple ways that I do. Now, one of the ways that I don't do it is something called BTC futures. BTC futures were created months ago on the Chicago Mercantile Exchange, and they're a leveraged way to buy and sell or short Bitcoin, okay? Now, one contract of this is equal to 5 Bitcoin, so it really is only going to work if you have 5 or more Bitcoin. The delivery is settled cash, which basically means you're either going to receive cash or be deducted cash, depending on where the price of Bitcoin falls or Bitcoin futures fall on last trading day. That could be above or below where you bought or sold this contract. It's not cheap. In fact, thinking you could do this like a regular futures contract for margin, think again. They're not even giving you 2 to 1 on this, all right? Between 20 to 60% of the cash price is what you're getting. So think about 5 BTC. If we're at 60,000 on Bitcoin, 60,000 times 5, that's 300,000 to buy 5 Bitcoin itself. To take advantage of the Bitcoin futures, which trade on Schwab, TD Ameritrade, and others, here's what it looked like for me. When I looked, the last time I looked at this, these futures were trading around 63,000. And guess what it takes in terms of margin? If I were to do it, $183,000 right now for margin on the Bitcoin futures. So not the cheapest and not the best way to do this. Another one you might be considering is the new ProShares ETF, which is BITO. This is also an ETF that trades off of Bitcoin futures. So it's going to have contango. It's going to have management fees. It's going to kind of pressure its way down a little bit. But you could short this ETF. Now, I just ran some numbers in my head and decided, well, you know what? I think I need about 1,500 to 1,600 shares of BITO to equal 1 Bitcoin. So for that, what is that going to cost me? That's going to cost me, guess what? The price of a Bitcoin, around 60. In this case, I looked at it, $64,616. Now, that's going to give me like protection because if Bitcoin goes down, BITO should go down. Here's the problem. If Bitcoin keeps going up, BITO could go up, and for every dollar you make in Bitcoin, you could lose it in this BITO. They're not exact, but I wanted to make sure that you knew that going forward. Now, what about options on BITO? Because BITO just released options. Now, we could utilize these options to protect ourselves to the downside while still giving our Bitcoins room to run to the upside. Here's how it works. If I buy a put, or I buy a spread, or I buy even a butterfly, I have a limited cost and limited risk. I do have downside protection, some more than others, but if Bitcoin were to keep going up, all of these would expire worthless, which might not mean anything if we hit 70,000, 75,000, or even 80,000 on Bitcoin. So let's analyze these 3 strategies: the put spread, and of course, the put butterfly. So I'm looking at protection between now and November 19th, 2021 as our example. If I were to buy the 40 puts, which are basically at the money puts with BITO, what would I pay? What's my cost? What's my risk? What's my reward? So your cost is going to be, in this case, $3.05. All right, multiply that times 100, and that's going to be $305 per contract. If I wanted to size this up for 1 Bitcoin, maybe I'd look at 18 contracts, because 18 contracts, if this went to 0, would bring in $66,500 in my account. which, by the way, is just a little bit more than Bitcoin is trading for right now. So that gives me protection all the way to zero. What's the chances Bitcoin is going to go to zero between now and November 19th? I'd say very, very low. So the real risk in this trade is if Bitcoin goes nowhere and I eat up this $305 per contract. Okay. So to buy 18 contracts, we're talking about $5,490. Is there a better way to do this? Well, yes and no. So let's take a look at the put spread. This is a BITO November 19, 2021 put spread. What this involves is buying the 40 puts and selling the 35s in November. We can do this for a combined cost of not $3.05, but how about $2? You pay $305 for the 40 puts, you sell the 35s for $105. That gives you a $200 per contract trade. That means if I were doing 18 and 18, this trade would cost me $3,600, not $5,400. So I'm wiping off quite a bit. What I'm also wiping off, however, is any protection below 35. So if Bitcoin drops and BITO goes down to 35, that's great. I got protection on the way down. But once we hit 35 and we go lower, I'm stuck as to how much I'm going to receive on the option trade that I'm doing, while Bitcoin could possibly go lower. So you would take this trade if you believed that Bitcoin may have a 10 to 15% pullback, but no more. And if you want a really low-cost trade that happens at the 12.5% level, then you might be looking at example number 3, which is the BITO November 19, 2021 put butterfly, the 40, 35, 30 butterfly. This right now, buying the 40s, selling the 35s times 2, and buying the 35s for protection, the 30s for protection, is going to cost you about $120. And if we looked at 18 of these spreads, that involves 18 of the 40s, selling 36 of the 35s, and buying 18s of the 30s for protection. You're talking about a cost of about $2,160. Now, here's the problem with this trade. This is great so long as BTC, if it goes up, this goes off the board, you lose it, but you make money, but you're making money on Bitcoin. If it stays sideways, you lose on this trade, but you don't lose on Bitcoin because it should stay sideways too. If you go down 12.5%, you make money on this trade, and you could make a nice chunk of return, $6,800, where you could lose $6,800 in a 10%, 12.5% drop in Bitcoin. But any farther down than 12.5%, any farther down than 35, and you erase those profits. So this particular trade is really geared for someone who's targeting a pullback and no more. Right? So when you add all this up with stocks, yes, you get dollar to dollar protection almost to the downside, but it also takes away from the upside. Derivatives, I don't even want to go there. I just merely mentioned that this is something that you could look at for buying or selling Bitcoin in the futures exchange. High leverage, high risk comes along with it. The options, however, is where I like to go to give myself limited risk, limited protection, okay? But also, it doesn't limit my profits in case Bitcoin goes on a new rip roar to new all-time highs. I just lose the premiums in these option trades. Hope you enjoyed the video, guys. If you did, give me a thumbs up. It helps out the channel. And of course, if you're brand new, consider subscribing. You'll get these videos every time we upload them to YouTube. All right, thanks again. We'll see you on the next one. Bye now.